Master your emotions, master your risk smart.
What's up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about some of the trades that we've taken this last week. All right, this is a trade recap video. We're going to have a lot of proof to show you the trades that we've taken. All right, but if you haven't already, go ahead, please subscribe to this channel because we always give out free content. And for those that are new to this channel, welcome. And just a little news update, we're still working on the course tirelessly. And here's some proof to show you that we're still working on it right over here and to show you what the future website's going to look like. We're geared up and focused to get you guys ready to get on this course as soon as possible so you guys can start trading the way we do. We're adding a lot of elements to our courses, such as our one-on-one sessions with me personally, our academy course, and coming up with other exciting elements like the signals. We'll be offering signals as well. So do me a favor, please watch this whole video entirely from beginning to end because you guys are not going to miss out any of this good information that we're about to share with you guys. What you guys are about to see is undeniably amazing and educational at best. So let's begin with this video. All right, guys, so welcome. Here is the trades that we've taken thus far since this last week. I want to show you guys and dive deep into these trades because I know you guys are going to learn a lot on these setups that we've taken. So let's begin. So for the first trades that we have taken, and I'm going to show you guys proof actually, was this one right over here. We've taken, not this one over here. This one was just an entry that I wanted to take on London. However, we're going to break all this down quickly and we're going to show you what happened right in this area. Okay, so typically when I trade, I'm always looking at the higher time frame. I always need to look at where the sweep of liquidity is going to be, right? Because we understand in London, when London opens, there's always, more times than not, a sweep of the lows or sweep of the highs. That could be sweep of the Asian lows or sweep of the Asian highs. It really depends. Sometimes it's not always an Asian low, an Asian high. Price just starts moving. In this case, we did see a sweep of the low right over here. You can see the liquidity line was presented, right? And then we had price from London move from this high, right where that red dot is, right over here. Since I have my charts set up for the Los Angeles time, because I always look at the Los Angeles time, I have London starting at 12 a.m. midnight. Okay, so you can see right over here that red dot over there. That it says 23:30, which is 11:30 p.m. at night. Right, London opened and it started pushing bearish here. I live in Lithuania now, so you know, I'm always capable to trade both London and New York. So anyway, once we saw London start opening from here, in fact, what I'm going to do is I'm going to delete this here so I can make it a little more easier, guys, so you guys can follow step by step and seeing what I'm talking about and explaining based on what I see. Okay, so right over here, let's go to the red dot. All right, price hit there, right? London opened on the next candle right over here. All right, you can see it's 00. That's 12 a.m. midnight. Los Angeles time. All right, so what am I anticipating here? Well, I'm anticipating for prices to run bearish here because when London opened, you guys can see we had a sweep of the highs right there, right? Let me drag your attention a little bit closer over here. You can see that there's a sweep of the high, right? So that is your swing high dot right there, right? So that means your swing high. Anytime price sweeps the highs or the lows, you're trading away from liquidity, right? We are going in the intention that the liquidity that the market has, you know, swept liquidity of the high or the low, and we trade the intention of in that direction, right? So that's why we're looking to trade bearish, right? I haven't placed any entries on this. We were just waiting for the main entry of the day, right? The main swing of the day. And so we're not trying to catch everything we see. We're trying to catch a couple of trades a day, if not, you know, maybe 3 or a few trades a day, right? In this case, we were waiting for price to run bearish, so let's continue bearish. You guys can see price did run some liquidity here, right? So I came in here and started looking for a confirmation to see if prices run. We didn't get any confirmation, so price came in, took out the main liquidity right over here, right? Now on London, I didn't enter here on London, primarily because I don't trade London on the NASDAQ 30 because London is a bit slow. It is smooth, to say the least. It is smooth. However, it doesn't give us as much as liquidity or volatility, and primarily liquidity on London as it does for New York. Okay, so that's why I didn't take it. However, this was a simulated idea or trade that I was thinking in my head. If I did this, I would take it right here and then. So let's go down on a 3 minute, and better yet, even the 1 minute. so you guys can see what my thought process was. So once we hit here, right, I could have obviously taken entries down here. You can see that there is, and by the way, one thing I want to mention is we don't wait for chalks or break of the highs or break of the lows. We immediately start taking entries as soon as we get confirmation liquidity sweeps from the lower time frame, right? So that means if when price comes down here, let's say right down here, right, we wait for liquidity sweeps, right? That could be 1 or 2 entries, right, at your given, say, contracts, because we trade contracts, right, or the futures. It could be pips for you, right? So once it sweeps liquidity, right, we start looking to see if we can go bullish, if we can start taking an entry. Now, once it takes out liquidity like this, right, mitigates their demand zone, right, we start looking the internal low from this low to this high, because we know this low is a swing low and that's a swing high, right, because this low swept liquidity, this high swept liquidity, so we have a confirmed range. That means we're looking to see if this demand can hold, right? Once it holds, we start looking for more confirmation just to get a tighter risk and control of that trade once we enter, right? So we don't lose that much money. The whole point of trading, obviously, is to manage risk. So once we saw price run up, right, it didn't give us what we wanted. We saw a sweep of this, right, this low. Right over here is an area where prices you could have entered, right? However, we didn't do that. We waited for more sweeps. You can see there was more liquidity here, right, because people are buying based on demand zones. Price swept, right, started running up. Now, in this case, I could have entered right at this area right here, because I do see this is another confirmation for us. We could have entered based off of this low or this low. The point of the matter is here is to lose little and to make more money, a lot of money, on the long aspect of the trade, right? On the long aspect of the market, right? You don't want to just enter as many times as you can and then just target, small targets, right? That's not the whole point of trading. Anyway, let's continue. So, however, we didn't enter anywhere here, obviously, and at least in my case, right? Or you can wait for the major structure to shift, which is this, right? So you literally wait for a low to break, a high to break, which is your chalk. You can definitely wait for that as well, right? And then here we go, right? This is where the entry would be. Now let me get rid of these lines here and just to show you why this would work here, right? To make it a little more clean. Okay, now notice what happened here. We have a swing low, swept that liquidity, ran up, created more liquidity. Here's a low, right? Another demand zone. Here's another demand zone. Other people are trying to buy here. So this forms liquidity. That's your liquidity line. There's your inducement line, which then forms more liquidity, right? Here's your entry point, and this is where the actual entry would have been. Now, if you guys have been following my last videos, okay, you'll understand that this here is a break and retest formation, whereas you get the break and retest traders coming in here from when they see a high broken. So let me just do this. I even have this set up here, a BR right there, BR break and retest. You see price running up, retesting this line, right, running up, and then what do you see? We see that the retest traders are swept right over here. You can see right there that they are swept indeed. This line is kind of, there we go. You can see that they're swept, right? So that is a form of liquidity, right? So then you enter from the imbalance perspective, right? And then you hold this trade, right? I put the risk right below and then you hold it higher. Anyway, we didn't take this trade, right? But I'm just trying to show you guys again what the realistic possibility would have been for this trade. Okay, so, and then what I would do, since I understand that London is the set direction for the entire day, and it does set the direction for most of New York as well, for New York, because New York is right after London. So we understand that once we take the center, we're actually targeting the daily high of the day. So you can see right over here, we would have targeted the daily high of the day, right? But while this is playing out, we're waiting for New York. So let's go for that trade, for that New York trade that we actually took, which is coming up right here. There it is. Let's go down to the lower time frames. In fact, let me just back it up a bit here. All right, that's 7:30 right there. So we'll take that off and we'll explain to you why we took this trade. And for that matter, guys, I want you to see a live screenshot right over here. You'll see probably somewhere right around here, you'll see on this video, there's a screenshot that we're going to post out that we took a live trade, exact time entry and exact time exits, right, with the profit in this for this trade specifically. Okay, so let's continue right here. so what we saw here, 6:30 a.m. is when the New York opens here in Los Angeles, or not here, but during Los Angeles time. You can see my crosshairs point that says 6:30 a.m. right here, right? We normally wait for the first candle, for the first 30-minute candle to run, because it's very liquid and very volatile, right? So we want to sort of not be a part of the mess, right? You can see here price did come, swept some liquidity, right? Respected some demand zone, a demand zone right here. You can see, right? This here is a sweep of the low. So that's a swing low. That's a swing high. Swept liquidity, came back to mitigate and started running. However, we then saw this. I'll show you right here. This is how we look for the entry, right? You can see right here, we saw, now this is a swing low here, swept liquidity, right? Ran another high, chalked or whatever, broke another high actually. Then there's more liquidity here. Now you can see that there's inducement, more liquidity coming in right here, and we thought to ourselves, okay, well, we just need to wait for this low to be swept, right? Once it's swept, then we're good to go for this entry right over here. So we entered right over here, holding it, right, just like this. And then we hit our TP. This took about an hour, I believe. Let me go on the 30 minutes here just to kind of see if this was correct, because we did hold it for an hour. Yeah, right over here. So we held it for 30 minutes, another 30 minutes. That was an hour right over here, right? And then we smashed the TP up here. Now, on the picture, on the image that I showed you guys, we did take 2 trades actually that were break even. The first one we took was down here. Let's go on the 1 minute right over here. Okay, let's go right over here. Okay, so what we did here was we did see a sweep of the low. We did enter right here, right? We were profitable for some time. Actually, no, let me back it up here. It was down here. The first entry was right here, right over here. Okay, it was approximately at 6:40 a.m. So we did see a sweep of the low. We went on the seconds time frame to actually enter right over here. So we did enter this, right? And this was a break-even trade. For us, we were trying to target the high of the day, just like that, right? So we got that taken out, right? And then we saw another sweep, which was this one here, the more liquidity sweeps. And then right here, we had more confirmation. You guys can see actually that line that I placed there, that liquidity line that was swept right there, right? And that's where I entered as well, targeting the high of the day, again, just like this. I think it was that line or something or other right up there. Right, and then of course, what do we had? Price coming to break even. Right now, when we're considering break even, trades, what we're looking for is for a high to break. Right, so if we're entering, we're looking for the high to break, whether it's internal high or the main high. It really depends up to you. Once we had a high broken, then we had price the market at break even, right, or a trade to break even, and then price came down again, swept more liquidity. We did our due diligence again, and we re-entered the market right in this area. We went on the 5 seconds again, to be exact. We had a very tight stop risk right here, right, and we entered and we held this last trade again. Now we did take 3 trades for that day, which was on a Thursday, May 15th, right? You guys can go ahead and fact check us on that one and see how this played out for yourselves, right? So what I was saying was here is just because you can take multiple trades within one, say with a small contract, or whatever your lot sizes or your pip sizes are, or whatever. Excuse me, lot sizes or contract sizes are for this, right? Do your due diligence in terms of managing risk correctly, because for us, it's okay to take multiple trades just as long as we target the main or the big move of that day. And because we are expecting the big move of the day, this is what we get, right? This is what you get. So we expected this, right? And so therefore, the trade paid us off. It did make us about $300, I believe it was $306 for this move here, which is very nice, right? So one of the biggest things that we're doing here at RoyalBluFX is we are challenging ourselves to take the long-term entries, right? Because it's fun to trade short-term entries, have short-term gains. However, we want to be holding everything for long-term gains, because it does become less monogamous, and there's less headaches, and less, you're less impulsive on things, right? There's less emotions, everything's so quiet and nice in the higher time frames because everything's slow, which is beautiful, right? All right, so let's continue on the next trade. So this was Friday, right? Let's continue here. Let's speed up the process. We did take We did take 2 trades on Friday, which was on London, and one in London, one in New York. So if I could focus your guys' attention here, I want to show you guys here. I'm going to do this, right? We had a sweep of the high, so that means that's your swing high, or at least a high for that, right? Price ran up, took out liquidity here. The price is starting to go bearish. However, this high did not break the low. So we are kind of in this area where price is consolidating, right? It's collecting liquidity from the high and from the low here. So what our main objective was here was to see what the 30-minute was saying. And this is actually when I woke up. As soon as I woke up, I saw a nice setup happening right over here. We saw that right over here, London was, it's 23, which is 11 p.m. Los Angeles at nighttime, 11 p.m. at night, right? So we're actually trading the Asia session. When I woke up in Lithuania, I think it was about 10:30 or so. No, 10 a.m. or 9:30 a.m. I think it was, or something or other. And then I saw the setup, right? So I didn't take this one, although it would have been nice. Once price swept, right? Price started running. I then said, okay, well, I knew this was supposed to go bearish because of what I saw on the higher time frame. And once price swept, it started running. I'll even show you guys the image right now. It should be somewhere right over here. There's an image of what I had drawn out already. But I took the second entry right over here because I knew the main high was swept and the liquidity price is pushing. The liquidity is pushing bearish, right? Or at least the market's pushing bearish away from the liquidity because you trade away from liquidity, right? We look to take the continuation of this trade, right, to target the slow. So this is what we did. We waited for the correct setup. Right, the continuation. Actually, this is a nice setup right here. Swept the liquidity, right? You look for your chalk boss, your entry, or whatever it is here to look for the entry right there just to continue bearish. However, we waited for another confirmation. You'll see it right here. We got a sweep of that high. As you can see, there's your liquidity right there, right? And then we went on the seconds time frame. And I can't go on the seconds because I'm not paying for the seconds on this on TradingView here. I have I trade on Top Step, right? A prop firm agency. Here we had price swept, right, and then we just entered there, right, and then held it to this low. Now, you guys are going to see something interesting. Once we entered here, right, it didn't quite hit on this area. However, on Top Step, since brokers are different, right? Different brokerage accounts are different, right? On Top Step, it actually hit this line. I hit my TP and everything was good. On TradingView here, it didn't hit because price was reporting just a little bit different. Sometimes price is just a little bit off from from other brokers, right? Not all brokers are created alike or the same. So this was nice. It was, I think, about a 6% that we hit here, or 6.5% on my Top Step. I'll show you guys the image over here. The image is over here already. And there you go, right? So that was good. Let's continue here on the main move of the day, which would be New York. Let me fast forward here. Okay, and I was just waiting for New York to come out. All right, so here's New York. Now, what do we see here? We saw this, the 4-hour low here, the liquidity swept. You can see that's a swing low. Swept this liquidity on New York right over here. 7:30 is showing right here. We know that 6:30 a.m. is when New York opens. Now, here's what's interesting. Again, once liquidity swept, what do? We trade away from liquidity, right? And that's the key component here, is to always trade away from liquidity, right? Once price got in here, we literally started entering here aggressive, and the only reason why is because we're trying to catch this day. Sometimes price doesn't come and sweep internally, which in this case, I think actually, yeah, it did right over there. It swept right over here, you can see, and you could have entered there. We wanted to enter as low as possible and hold this trade as longer as we could till we got our desired TP, right? So once we entered here, the same thing follows. Again, this is what you do, right? You could have had another entry there if you wanted to, right? Let's go continue up. Okay, this is what's happening, right? So we had this high. We were looking at this high here, and once this high was broken, we looked to break even on this. So we had a break even on this trade. as soon as price broke the high, right? Some people collect, some partials, right, up to 3%, 4%. We just literally enter as soon as we break even. We take our stop loss from the slow, we put it above the high, and now we just wait for prices to rise, to continue, right? Whether it came against us that day or not, it's all entirely up to the market, obviously. But we are not. What our mentality is we're not chasing money. We're chasing the strategy. We're chasing the setup. That's what we want, right? So we're vividly and evidently looking for the correct setup, right? Because we're only risking a little bit, right? The whole point is to risk little and make a ton at the end of the day, and that's what we're trying to do. We're not trying to, capture 2%, 3%, 5%. We do want to get paid out. However, we know the best scenario for us is a break even, because at the end of the day, even a break even is still a win, right? You're not losing any money. So that's what we're doing, right? We held it here, and then I believe sometime around this time, once we broke here, we got out of the trade, because my initial target for this entry, for this whole setup here, was actually this high over here. However, since it was Friday, and everybody's drawing out of the market, banks, institutions, whatever, hedge funds, right? Everyone's drawing out of their positions, and retail traders drawing out positions, less traders. We decided to opt out of this trade for about, I think it was 4.5%. So that was something around here, or 6.5 maybe, I forget. I don't know. I know it was above the break even, so I should have it on the screenshot right over here. You guys will see the screenshot with the money that we made for this trade, right? But it was a healthy trade nonetheless, guys. And then obviously, when I stopped trading for the day, you guys can see over here. Let me see if we go run this up. It did take out, I think it took out this high. All right. It did take out this high, right? So I would have wanted to hold this trade for this desired high over here, right? But we ended up here. However, there's a liquidity line right over here, liquidity line right over there, right? So my anticipation was it could probably, reverse price back and push it all the way bearish. Sure enough, watch what happened. Where were we? Oh yeah, right over here. So this is the end right over here. Let me just get rid of that right there. Okay, that was the end, right? And look at that, right? Look at this huge drop, right? Just because of this liquidity line that was swept over here, right? I anticipated everything right, because there was liquidity sitting above the high. This low did not break the high, right? This high did not break the low. So we are in this liquidity pool, right? Where the market is gathering liquidity from the highs and the lows. So you guys can see that because we took an entry here, we targeted a very generous area, a very safe area for Friday. We took out the cash that we needed, right? And that was it for that day, guys, right? So again, a lot of this trading is more about, as we all understand, as a community here in the trading community, is to manage risk, to manage your trades, risk little, make a lot, on your desired TPs, right? Whatever that may be, guys. And I hope you guys learned something about what we did here. This is very important. We always take trades like this every single day. We're always we're intraday traders. So I hope you guys learned a lot in this video. If you guys liked the video a lot, go ahead and throw a thumbs up. Go ahead and subscribe to this channel, because we always give out free content, guys. If anything, if you guys want to hear us for more in the future, go ahead and contact us on Instagram, because we're always active on there, as well as TikTok. Until then, guys, I will see you in the next video.